What does the perfect investment look like? Many have never really done the research. So today's the day to find out about the perfect investment, unlocking its secrets. Let's consider three things. One, what are the attributes we're looking for in a perfect investment? Two, what are the pros and cons of today's most popular investments? And three, ultimately, what is the Captain Kirk or the gold standard for the perfect investment? The answer will surprise you. If you were designing the perfect investment, what would it look like? Here's a list I believe everyone would come up with. First, it would have a high rate of return after fees and taxes, but it would also consider what the risk-adjusted return would be. Two, it would have a consistent rate of return. Three, it would be conservative or considered safe. It would be liquid. It would have guarantees. It would have tax benefits. There would be no limit on contributions you can make into it. It would have no market volatility. It would yield income in addition to capital gains. It would have preferred creditor protection. It would have inflation protection. It would have control, meaning your money would not be in prison. It would be easily transferable. It would be easy to manage, meaning there's no big learning curve. It would have no hidden fees or penalties. If it had fees, those fees would be low. It would be reputable, meaning it would be legal. It would be private and outside of the eyes of the public realm, and would even have the ability to borrow from it on a guaranteed basis for any reason with no credit check. So now that we've gone through the list of attributes we're looking for, let's evaluate those attributes to some of the more popular current investment opportunities. So stock market, we'll start there. Advantages are its higher long-term average rate of return. It's liquid and provides dividends as a flow of income for those desiring that. Disadvantages include, well, it is volatile. If you want tax benefits, you'll have to consider registering your investment as a tax-free savings account or a registered retirement savings plan, both of which do have limits on contributions you can make. And in the case of the RRSP, there are penalties to access. Looking at another option, bonds. Bonds are safer than stocks because bondholders get paid before stockholders. Disadvantages include they don't appreciate as rapidly as stocks, and they decline in value during periods of unexpected and rapid price inflation. Real estate. Advantages include property values tend to rise over the long term. And if you are acquiring real estate as rental property, having someone pay your mortgage is great as long as you could find a tenant. Disadvantages include being a landlord potentially. Property values do not always go up. Case in point, Great Depression, real estate in the 1980s, and the housing bubble burst. Further, there is a potential lack of liquidity. If you want to sell your property and there's no buyer, hard to sell. And yes, there are fees when you do sell. And if you're going to finance your property, the borrowing process is very invasive. Gold and silver is a safe haven. It's private and you're in control. Cons include it's volatile at times. It does not generate income. If you do need liquidity, you must sell. And yes, there are fees to buy and sell precious metals. Lastly, let's look at cash. Advantages are it's liquid, it's safe. If you're putting it in a bank account, some possible guarantees on interest. Disadvantages include bank deposits are an IOU from the bank. So you do give up some control. And as we've seen more so recently in the States, banks do collapse. They're designed to collapse. That's why we need Canadian Deposit Insurance Corporation insurance to protect your money. And lastly, generally you get no to little interest. And before I reveal that perfect investment, help us by liking this video, subscribing to our channel, and please share. So let's take a look at what is the perfect investment. many will be surprised. So again, we reviewed the attributes that we agreed most of us would come up with. And when you use these attributes, my conclusion is we have just described a dividend-paying whole life insurance policy. Yes, you heard me correct, a dividend-paying whole life insurance policy. Further, whole life insurance is not an investment. Investments can go up and down in value. Whole life insurance never goes down in value. What's this reference to Captain Kirk? Captain Kirk, as you may know or not, is an old TV series titled Star Trek. And Captain Kirk was pretty good at everything he did and had no serious deficiencies. And that kind of describes whole life insurance very well, because it does do very well on all the attributes of the perfect investment that we put together. And if there's any of those attributes where whole life insurance is considered weak, it's not that weak at all. So a couple of points I wanted to highlight. First, whole life insurance returns are virtually the same as the long-term returns as other investments like the stock market. Case in point, I have a dentist who is a client in Ontario. I reviewed his 30-year-old whole life insurance policy and discovered that his return on his cash value growth was virtually the same as the return on the TSX over that same 30-year period. Further, whole life insurance has the best risk-adjusted return of all assets. When compared to the stock market, whole life insurance has 32 times less risk than the stock market. Whole life insurance does very well when considering Warren Buffett's #1 rule of investing: don't lose money. Whole life insurance does not lose money. Whole life insurance is also a sound money asset. Sound money is money that does not increase or decrease quickly. It's very, very stable. And lastly, whole life insurance is the foundation for something called infinite banking concept. Infinite banking is the only way to recover lost money. Lost money includes interest you're paying to bank for loans, and also the opportunity to recover what we call opportunity cost lost. That would be on money you redeem from your account to spend or invest elsewhere. And when you do that, you lose the growth that money would have earned had you not done that. Some of the takeaways include, we're not putting down stock market investing or any of the other investments. They're all part of a well-diversified portfolio. And when it comes to stock market investing, yes, we do that, and we do that well. We will continue to offer that. However, as a certified financial planner, knowing what I know about whole life insurance, it's my duty to do what's in the best interest of the client. And based upon my research, I would be doing them a great injustice by not making sure they are aware that dividend-paying whole life insurance is the gold standard of a financial plan. Dividend-paying whole life insurance should be a significant piece of your financial security plan, and ideally should be the first piece of it before you put your money anywhere else. It's so all-encompassing that it is not too far-fetched to say, if you could select only one financial vehicle, this would be the one. And it would deliver and provide you the desired financial results that you want. So regardless of your age, it's never too late to get started. Check out the video notes for more on perfect investment, unlocking its secrets.